The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Equity is going nowhere fast. Live from Studio 2 of Bloomberg headquarters in New York, I'm Alex Steele.
And I'm Scarlett Fu. We're going to kick you off to the closing bell here in the U.S. and find something interesting in the market action.
Okay, let's do that. Maybe it's Meta. We're looking at the equity market going nowhere. Like I said, nowhere fast. Flat for the S&P. Now, we have recouped those losses that we've seen since DeepSeek Monday. We just recouped that today, actually, so that's significant. But I did want to highlight Meta. We're now up for 17 straight days. This is a record-winning streak. This is also yet another record high. 10-year yield not really doing that much either. Yields on the back end moving just a touch higher off of Powell.
All right, well, Mr. Powell visits Capitol Hill and gave lawmakers the same message that he told investors last week. The central bank is in wait-and-see mode. Of course, day 2 of his testimony on Wednesday will be colored by the consumer inflation report due out tomorrow morning before the opening bell. Look for Powell to sound the same notes as what he told the Senate Banking Committee today.
With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation.
Market reaction to the reactive Fed, muted. In fact, stocks are mixed, as Alex just told us, and Treasury yields, they are higher across the curve, much to the chagrin of the Treasury Secretary. Now, the 10-year yield is holding above 4.5% as the Treasury Department cut the size of some benchmark bill auctions. It's really a sign of the times as the government takes steps to avoid breaching the debt ceiling, which will be a fight for another day. Speaking of fights, OpenAI Sam Altman accuses Elon Musk of trying to slow his company down and gain a competitive advantage. Altman again rejecting Musk's $97.4 billion hostile takeover offer for control of the AI startup that they both co-founded before Musk left. Later on this hour, we're going to dig into the valuations of big tech companies and big cap stocks with Aswath Damodaran of NYU Stern School of Business. But Alex, it all comes back to inflation, and we didn't really get anything new from Powell today on inflation.
No, I'm sure he's really happy that we're saying that from his testimony. Tomorrow, though, of course, is the House Financial Services Committee, and we get that CPI. But Powell in his testimony really talked about how inflation expectations are well anchored. So I wanted to bring back this chart, one of my favorite, which is the 2-year inflation break even. That's the orange line, and the 5-year inflation break even. That's what investors are expecting inflation to be in 2 and 5 years' time. It's a short term, right? It's the 2-year inflation break even that has really soared ever since President Trump took office and started to talk a lot about tariffs. But now even the 5-year is starting to catch up a little bit. And we saw that in the UMich sentiment survey, that 1-year inflation expectation rising 100 basis points to 4.3%. So the question is, if tariffs continue and the expectation is then that things will get more expensive and then people buy stuff now and that sort of ignites this inflation cycle, is that going to wind up being that headwind for the Fed?
And it's something that we know Powell doesn't want to answer yet until we see evidence of that. So let's kick things off right now with Rebecca Patterson. She is Senior Fellow at the Council on Foreign Relations and also the former Chief Investment Strategist over at Bridgewater. Rebecca, great to see you again in studio.
Good to see you too.
So this is a Fed that's clearly on the sidelines in spectator mode, even though President Trump has made clear he wants lower interest rates. We heard from the Treasury Secretary, Scott Bessent, that they actually want lower Treasury yields. Is that something we've ever heard from a Treasury Secretary?
I can't remember in my career a Treasury Secretary trying to talk down the 10-year yield. I understand why they're doing it. You know, we have a large debt, rising debt, and we're about to pass a fiscal bill at some point later this year that'll probably increase it further. So what they're trying to do is work against that. And the question in my mind is, what can they do? It's a $27 trillion Treasury market. It's not easy to manipulate. I think there are some things they could do. Obviously, you can issue more at the short end. That's what Janet Yellen did, but Bessent has actually criticized her for that. So I think that's not something he would lean into.
But he's held to the same thing that she's done, right?
But he doesn't want to do what she did after criticizing it. So that's one step. I don't think that's likely. They can try not to have a huge increase in the deficit. We'll see what happens. How much spending can they cut, right? I'm not holding my breath on that. One thing that isn't getting talked a lot about that is worth keeping an eye on is stablecoin. So in Trump's executive order on January 23rd, he's pushing forward to have a crypto America. I wrote about this today. It's out online. And one thing they're trying to do is push stablecoins. They're backed by Treasury and cash-like securities. Tether alone has something like $113 billion worth of indirect and direct Treasury holdings. So if that market grows, like a digital dollar, right, a crypto digital dollar, they're going to have more demand for Treasuries. That by itself isn't going to be nearly enough, but it's another little piece of this puzzle I would keep an eye on.
I didn't hear that before. That's really quite interesting. For the short term, though, do you think inflation expectations are anchored? Because that clearly is going to be the whipsaw on the back end.
I think they are still anchored, but you're starting to see some incremental nudges higher, right? If we look at the latest University of Michigan, if we look at the New York Fed's latest consumer sentiment survey, even the small business sentiment survey that just came out, all of them are suggesting a bias towards higher inflation expectations and higher inflation uncertainty. Lori Logan at the Dallas Fed just gave a speech about this about a week ago, and she was saying that higher inflation expectations, higher uncertainty can become self-fulfilling, and the Fed is very focused on it. So we want to watch those surveys.
Of course, it's the fear of tariffs that is sending yields higher, that is inflating those inflation concerns. But there is something to be said about the tariff threats and how they may play into Besson's options to keep Treasury yields capped. Can you talk us through that?
Yeah, I mean, if the new administration makes great progress on deregulation and they can help the supply side of the economy, right? We get more growth with less friction. That at the margin can be deflationary and good for the economy, but bringing down inflation. That would be a dream for Bessent. The thing to worry about is that the rhetoric we're getting, you have a tariff. No, we're going to pause it. Yes, you have a tariff. Where, who, when? There's so much chaos around it, as Ken Griffin just said down at a UBS conference in Miami earlier today, a Trump supporter saying it's chaotic. The uncertainty makes businesses more cautious. It makes consumers more cautious. So if you have rising inflation expectations and caution over spending, that's the nightmare for the Treasury and the Fed. That's stagflationary. I don't know if we're going to go there this year, but it's a risk. It's the biggest risk for the market.
But sentiment is still really good. Like even NFIB today, it came off the boil a little bit, but it was still super solid.
That's what I mean. What we're seeing so far is incremental. The Bank of America does a great monthly survey, and they're saying the consumer's still spending. Incrementally, maybe a little more moderate, but still spending. So right now, we're fine. But you're starting to see a few little cracks, and that's what I want to keep an eye on. Do they just stay little cracks? People are a little nervous because we're not used to a government going fast and breaking things. That's usually tech, not the government. So do people get used to that and we settle down and we keep spending, or does the caution build? I think the next couple months are going to tell us a lot about this.
So caution is the word here, especially when it comes to the bond market. Is that the same dynamic in the equity market? We're still near record highs.
Yeah, I mean, as long as the consumer is spending, right, even if the Fed's not cutting rates as much, and what we have about 35 basis points priced in for cuts now for this year. So that's come back a lot. But you have enough spending, that's supporting earnings, it's supporting confidence, and so it's keeping the stock market supported. But again, that can turn quickly. If we lose that wealth effect and confidence for the consumer, it's going to be harder for stocks to keep going. The other thing I'd watch with the tariffs, China, so far, it's very targeted, very narrow, but focusing on our tech sector. Given the valuations, given the ownership of the large cap tech stocks, if people decide to retaliate by going after tech stocks, not necessarily with tariffs, it could be non-tariff sanctions of some sort, controls of some sort to slow spending, make it hard to buy whatever tech product or service overseas, that could be another thing that could cause a bit of an unwind of those trades, and that would cause the U.S. to underperform. So we'll see. Right now, the consumer is good, and that's all that matters.
So to that point, quickly, U.S. exceptionalism is still the thing.
Well, interesting, right? Because the U.S. is underperforming most of the rest of the world so far this year. But I think that's a trade, and I don't think it's going to be extended. People are relieved we haven't had bigger tariffs yet. They're looking for cheaper valuations. They're looking for somewhere to diversify. But for that to continue, we'd need to see a benign tariff environment persist. I don't think that's likely. We'd need to see more China stimulus that helps the rest of the world. We might, but my fear is it'll continue to be incremental. So I wouldn't be leaning into the rest of the world trade. I do think we're still going to be in a U.S. leads the way for the year overall, but how much the U.S. can go up is going to depend on the uncertainty and where we started on the inflation.
All right, so American exceptionalism with a big asterisk next to it.
Yes. ... Bingo. Exactly.
Rebecca Patterson, always a pleasure. Senior fellow at the Council on Foreign Relations and former chief investment strategist at Bridgewater. Now, we've got a lot more coming up on The Close. Coming up, as Donald Trump's policy priorities come to fruition, 10, we discuss how the administration is tackling energy with the newly confirmed Energy Secretary Chris Wright.
And speaking of policy, we're going to break down some of the latest moves from the Trump administration, including tariffs and the tax bill, with Henrietta Treyz, and managing partner and director of economic policy at Veda Partners. I got there.
And we're also waiting for some results from big names after the bell. They include Zillow, Lyft, and DoorDash. We're going to break them for you as soon as they hit the tape. All that and more coming up. This is The Close on Bloomberg.
Let's transition now to Washington, where the U.S. Department of Energy has outlined their energy roadmap focused on unleashing American energy innovation and strengthening power grid reliability and security. I'm pleased to say that U.S. Energy Secretary Chris Wright, who was confirmed just last week, joins us now for an exclusive interview. It's such a pleasure to have you, Mr. Secretary. Thank you for joining us.
Thanks for having me, Alex. Great to be here.
You bet. So last time we talked, you were CEO of an oil company, and now you run energy policy for the United States. That's a big change. What do you say when I ask you the question, what oil price do you guys want right now?
Well, I don't want any oil price right now. Lower's better. The president got elected to bring down energy prices and broader prices across the economy and grow opportunities for American. So my goal right now is more energy of all kinds, more affordable, reliable, secure energy to expand American opportunities.
But the easy pickings are oil. So what's the price? And I say this because with your dual hat, right? If you were an oil producer, you don't want $60 oil. You want to make more money for the oil. As energy secretary, you want $60 oil.
Well, all we can do, supply and demand will be decided by, well, consumers in the marketplace and producers. But what we can do and what we're focused on is reducing the cost to produce a barrel of oil. So for producers, they could have lower oil prices and the same profitability if their costs were reduced. So the last administration spent 4 years trying to put all sorts of barriers, make it harder and riskier to produce oil in the United States. We're going to do the opposite. We're going to try to enable producers to bring on supply at lower costs and greater certainty.
So I'm going to follow up on that, Chris, and ask how can you lower the cost curve for companies to invest in new development and not just use money to offset regular well declines?
Yes. So one of the biggest challenges investing in oil and gas infrastructure over the last bunch of years has been uncertainty. If you produce more products, can you get it to market? You know, we still have 6 states in New England without a reliable supply of natural gas. That's bad for producers. That's bad for consumers. But there's a number of barriers like that we can move out of the way. LNG export pause, for example. Everybody in India is alarmed they might not get an increasing supply of natural gas. And how are American producers of natural gas going to invest more in gas production infrastructure if they're not sure if they can get it to market? So I think, we can help the consumers of India, the population of the United States, and producers of natural gas by just removing those uncertainties and going back to regular common sense business.
Removing uncertainty is one thing, but I'm curious whether there's a ceiling on U.S. crude production. Right now, the EIA is projecting a 2.3% increase in U.S. crude production. How much higher do you think realistically that could go?
Well, again, that's going to be the ability to build infrastructure and access more consumers. But I think it could grow meaningfully. It's probably not going to grow meaningfully in the short run, although our natural gas production, I think, is going to grow dramatically in the next 2 or 3 years. But if you look at 5 or 10 years, could America grow our oil production significantly? Absolutely.
Mr. Secretary, to that point, in terms of building out infrastructure, that's been very difficult in terms of permitting, in terms of getting something in the ground. That's been very hard. Do tariffs and higher prices for aluminum and steel and things like that make that even harder for you?
Look, the tariffs, what's been the big issues for this president that he ran on? The economic well-being of Americans and the national security of our country and our citizens. So we've had 20 plus years of sort of deindustrializing the United States and letting our heavy industry flow overseas. This president is passionate about increasing national security, and that means we have to have the ability to build heavy steel intensive, aluminum intensive, material intensive systems in our country again. So this is an attempt, I believe, by our president to incentivize the reindustrialization of America.
Talking about different forms of energy, because as you pointed out, like, it's not just oil, right? All forms of energy. It's energy security. What role do you think coal is going to play in that?
Look, coal's been essential to the United States' energy system for over 100 years. It's been the largest source of global electricity for nearly 100 years, and it will be for decades to come. So we need to be realistic about that. Now, with coal, are we going to see a renaissance in surging coal production in the United States? Not likely, but we're on a path to continually shrink the electricity we generate from coal. That's made electricity more expensive and our grid less stable. So I think the best we can hope for in the short term is to stop the closure of coal power plants. No one has won by that action.
You know, I was looking at the energy roadmap that you've published, the department has published, and the word security comes up so many times. I'm wondering why, or does energy security also include solar and wind? And if not, why not?
Well, the goal is, we're not specific to any particular energy production technology. The goal is just affordable, reliable, secure energy from wherever that comes from. Obviously, there's going to be roles in the long run for solar energy. There's places where it makes tons of sense, where the natural resources are there and the infrastructure is benefited by adding more solar to the grid. But I will say one thing for sure, we're not going to go down the road of Germany. You know, they spent $500 billion. They more than doubled their price of electricity. They actually shrunk the total amount of electricity the country produces by about 20%, and their industry is fleeing the country. That's the path the United States was starting to go down, but that's the wrong path.
So if I'm hearing you correctly, there is a role for things like solar and wind, yet some of the president's executive orders have can be seen as clear moves to stifle those industries.
I guess stifle might be the wrong word, but we shouldn't subsidize technologies that ultimately just make our energy more expensive and less reliable. I don't think you'll see policies that continue to go down that road.
One other policy as well is nuclear. We've seen a real resurgence in restarting some nuclear facilities. The previous administration was looking towards domestic uranium production, and I'm wondering if you would continue down that road, because we need that if nuclear is a big part of that solution.
Absolutely. One of the industries we've lost in this country, or lost in large part, is the ability to produce nuclear materials, generate nuclear power. Ultimately, we need that infrastructure here. We need that mining here. We need that uranium enrichment here. We need that to again, be building and growing our production of nuclear energy. So absolutely, our hope is to really start the American nuclear renaissance as fast as we can.
So then let's talk about some of the legislative ways that you feel like the administration can manage this, because the Democrats came out with the IRA. What can the Republicans come out with that can prevent something more dramatic being done down the road under a different administration? What specifically can you guys get done?
Oh, I think there's a lot of things. Now, some of these we've heard talked about for years, but no action. Just common sense permitting reform. America became this phenomenal industrial powerhouse by people building things in America, investing money, taking risks. Heck, we built a highway system, a pipeline system, an electricity grid in plants. We've come to a point in America today where it's very easy to stop something from being built, and it's very hard to build something. Yes. We need to reverse that. And a lot of that is going to be through legislation.
That is a part of it, too. I wonder, though, in terms of, say, federal lands, for example, like selling federal acreage to the state of Alaska so it can do what, say, Texas does. More concrete, smaller things like this.
Yeah, look, all ideas are on the table and all ideas are being discussed. At a minimum, we're going to see common sense permitting on federal lands. Of course, this president and this administration loves the wilderness and wildlife and the ever cleaner air and waters that I've enjoyed throughout my lifetime. There's no change in any of that. But we have so many obstructions that don't allow roads to be built on federal land, roads that could be used for logging and wildfire control, roads that could access mining and minerals production. So I think we're going to see just a return of common sense to use the federal lands what they were intended to be used for.
Now let's switch to a different part of the administration. That's in terms of money being doled out, the Department of Loans. It was very contentious under the Biden administration in terms of the money that was going out the door in relation to the IRA. What's your guys' plan? Are you going to divert the money to projects that you guys like? Are you going to kind of roll back funding for projects you didn't like?
Well, you know, I'm inheriting a portfolio. So the first thing I'm doing from the day one I walked in the office is to understand what is our existing loan portfolio. Who do we have loans out? What are the terms under which they are? Which projects are midway? Which projects haven't launched yet? So I've got to follow the law and manage what I've inherited. And then there's a lot of monies uncommitted or early on. And of course, those will be deployed to advance the president's agenda of affordable, reliable, secure energy. We just saw recently the Ivanpah nuclear power plant. Solar power plant, sorry about that. You know, a concentrated solar plant out in the California-Nevada desert, right near the state line there. That's certainly north of $1 billion loss in taxpayer funds for something that's not producing a single watt of power today. And during its brief lifetime, it produced very unreliable, expensive power. We don't want to do things like that. We want to focus on American consumers and not subsidizing this industry or that industry. We want the marketplace and consumers to pull what energy is in demand.
Of course, but you also have your own priorities. I'm wondering, would you cancel loans that have already been doled?
We will follow the law. So that's what I'm doing right now, is rigorously looking at what is the status of those loans, what is the status of those projects. And no, things that we inherit that are half pregnant that are going on, we will continue to honor the law.
Mr. Secretary, I want to ask you about the SPR, the Strategic Petroleum Reserve. President Trump has vowed to refill that, quote, right to the top. What is the appropriate volume for the 700 million barrel reserve?
So, look, I'm not going to talk specifics right here, but as you just hear right in that name, the Strategic Petroleum Reserve, that's not the electoral advantage petroleum reserve that we use to drive down energy prices around election times. That's not what it's for, right? The Strategic Petroleum Reserve is things can go wrong. We can have a strategic crisis, and we don't want America's consumers and America's military at risk of an energy shortage. So we need a robust strategic reserve that makes America ready for whatever may come.
Do you know how much you're going to ask Congress for and how fast you can refill it, Mr. Secretary?
That's being evaluated and discussed right now. So, no, I've got no scoop or no news to leak on that right now. But it is a good question you're asking.
Oh, come on. Break some news with me. That'd be much more fun. All right, next time you'll come back and you'll tell us. I guess my question is, what's the conversation you're having now with, say, big oil companies on that? Have you been able to start this conversation?
No, right now I'm looking internally at what's in our department right now, what's in our technology portfolio, and what are the barriers that the government has in place that we can do something about. I've not had any dialogues with big oil or any of the industry players since I've assumed my role. Not that I won't going forward. But right now, I'm trying to understand where are the biggest problems, how can we get the shortest term, biggest wins?
Yeah, well, it seems like everyone in government is doing that right now, trying to assess the situation. And I'm curious whether the members of DOGE, the squad that's embedded at the Department of Energy, have requested access to any classified information.
They have not. And I've met the DOGE team that's at Department of Energy and liked them a lot. These are passionate people that are coming in to looking very specifically right now at the flow of funds going out and the systems we use to carry out our basic business functions. How can we be smarter and more efficient doing what we do? And how can we be very careful to know where funds are flowing and where they're not flowing? So it's much less intrusive than a typical corporate audit, but it's giving quick, up-to-date information to help me and the rest of the department run more efficiently and be better stewards of the taxpayer funds.
The DOE was quick to say that there's no nuclear secrets being given away or anything along those lines, and I put that in quotes. But is there a circumstance where you would have to turn that over? Is that become aware of any of this at any point?
I've heard nothing about that at all. You know, we did security vetting on the small team that we have. They have read-only access to very limited parts of our systems. No one has asked or expressed any interest, and we would definitely not share the secrets of our nuclear weapons program and our nonproliferation and all those efforts. That's not part of DOGE. This is not a reckless effort. In fact, it's a very focused and thoughtful effort to quickly look for ways to improve how we run the business.
Right, to streamline things, make things more efficient. We understand the purpose there behind DOGE. So I guess the question for you, Mr. Secretary, is how lean can the DOE get then?
We don't know yet. We don't know yet. But if you take an organization that hasn't been carefully looked at, are we finding low-hanging fruit to reduce our expenditures and deliver the same output? I can say that's an unqualified yes, we are. How big those savings are going to be, well, it's a little early for that, but they will be meaningful. We will find meaningful savings and efficiencies without any degradation of our output. In fact, I think we're going to see dramatically different output. Our agenda is energy addition, and I'm taking over for an administration that's goal was energy subtraction. So I think we're going to see far more output and productivity at reduced costs. That's the plan.
I mean, that's what oil companies do. So you are very familiar with that way of operating, Mr. Secretary. Before we let you go, you mentioned stopping closure of coal plants, et cetera. We were talking about nuclear. We're talking about the growth of LNG exports, et cetera. What do you think in the United States has the most potential to be the next big thing, to be the next U.S. shale?
I think for in the short term, the next big exciting thing is continued evolution of shale. I mean, today, over 70% of the energy consumed in the United States comes from just two things, oil and natural gas. Now, one of the things I want to do is grow that pie of significant contributors. And probably the technology we know of today that could most meaningfully grow is nuclear. Both these next generation small modular reactors, but also keep an eye on fusion. I went to college. I went to MIT 40 years ago to work on fusion energy. We will see positive energy liberated from fusion machines in my tenure at the DOE. And commercial fusion may not be that far behind. These aren't, 1 year, 2 years from now, but technology's moving fast. And I think as you look out several years into the future, nuclear is going to be on the rise and add a lot of affordable, reliable, secure energy to America. It's got some ways to go from where we are today, but there's a great roadmap there that I'm quite excited about.
Mr. Secretary, thank you so much. What a great way to end. We really appreciate all the time that you gave us today. Let's check back in about fusion. I love that we can talk about this. Thank you so much, Chris Wright, U.S. Secretary of Energy. Scarlett?
All right, we are about 30 minutes to go, just over 30 minutes to go before the U.S. market closed. And as we were telling you earlier, it's pretty much a mixed day in equities. The S&P 500 now in the green, up by 4 points, 6,070, a 10-year yield inching higher by 3 basis points, but still very much in that 4.5% range that it's been at. Jay Powell did speak today and made clear that the Fed is in no rush to resume cutting interest rates. Dollar somewhat weaker by 0.25%, according to the Bloomberg Dollar Index, and gold retreating from its record high, now at $28.95 an ounce. Now, while government officials try to navigate economic uncertainty, tech leaders are facing, their own challenges. Elon Musk saying that he made a $97.4 billion bid to buy ChatGPT creator OpenAI. That company's CEO, Sam Altman, pushed back against Musk and that offer when he sat down with Bloomberg earlier at the Paris AI Action Summit. Take a listen.
I think he's probably just trying to slow us down. He obviously is a competitor. He's working hard and has raised a lot of money for XAI, and they're trying to compete with us from a technological perspective, from getting the product into the market. And I wish he would just compete by building a better product.
Now, when it comes to investing in tech, our next guest is still cautious about the what AI really brings. Joining us now for more on this is Aswath Damodaran. He is professor of finance at the Leonard Stern School of Business at NYU. Aswath, Professor Damodaran, thank you so much for joining us. We got to start with AI, obviously, with Altman, Musk, and the Chinese racing each other to build out their AI models. Investors who own shares of NVIDIA and the Mag 7 companies aren't complaining, present company included. But you see the tens of billions of dollars being spent as overkill, and it's more fundamental than simply stock valuations of some of those Mag 7 names. Can you start by explaining why you're so skeptical?
To begin with, the end market here is not for the architecture. Right now, all of the money is being spent on building the architecture, the chips, the energy companies, the cooling companies, and an ecosystem of companies making money in building the architecture. And companies spending tens of billions. I mean, take a look at just Meta and Microsoft and how much money they've thrown into building the AI architecture. But nobody's really making money on selling AI products and services. People are trying. They're framing it as something you can do. But, I have a feeling that we're vastly overestimating how much money can be made. I think the AI market is going to be huge in terms of products and services. I'm just not sure you can make very much money off those products and services for the most part.
Why? Are you looking at that from a consumer point of view or in terms of how companies might use this technology?
On both fronts. I'm sure you, like I, are seeing AI buttons on pretty much everything you use, right? On your Microsoft Office products, on my Zoom, there was an AI button. And my reaction to almost everything I've seen in AI so far has been, that's neat, that's cute, but I'm not paying money for it. And I have a feeling that a lot of the consumer AI stuff is going to be stuff that you're going to put on your phone or put on your computer. But it's really something you can live without. It might make it interesting for you for a while, but it's not something you're going to pay enough money for it to make a difference. There is a market for premium AI products, which are business-to-business products. And I think that market will develop. The question is, how big does that market have to be to justify this upfront investment? And I'm not sure that the numbers match up, because right now, I mean, if that market, unless that market is about 3 trillion to 4 trillion, we're just over-investing in the architecture of producing products for that market.
So I guess maybe the Luddite question here is, how overvalued then is the market?
The market itself, I mean, for the most part, the companies that have been in the AI buzz, I mean, obviously it's NVIDIA and companies like Constellation Energy have clearly benefited. Among the Mag 7, if you look across the companies, it's not like all of the other 6 companies have gone up because of AI. Microsoft and Meta have benefited, but if you look at the total market cap, the effect that AI has had is maybe a 5%, 6% increase in value. So I think that we might be overestimating how much the AI has contributed to this market. It's been an easy thing to point to. Why is the market up? Oh, AI did it. And I think that's been a lazy answer we've been giving for the last 2 years. But for the most part, when I look for companies where AI is responsible for the jump in the company, I'm not finding that many companies which are outside of the AI architecture where I can make that judgment.
That's funny. So just the easy excuse that we're giving the market. Man, you're calling us out. So when you take a look at, say, the other part of the market, like the other 493 stocks or the other stocks that aren't associated with AI, how's that valuation looking for you?
I think there's no way around it. We're paying prices that I can just describe as richly priced. The question is whether it's priced so high that you're going to call it a bubble or a correction. I don't think we're in that territory yet, but we're paying premium prices. We're building in an expectation that nothing bad will happen, and that so we're seeing the bright side of what's coming. Lower taxes, maybe less regulation, that'll help companies, but there's also a little bit of chaos coming with it, which we haven't seemed to have built into the valuation. Maybe that chaos will never manifest, but that's what the market seems to be building in. It'll not manifest, and if it does, I think we have some cleaning up to do if that happens.
Okay, so let's talk a little bit more about that, because you are kind of reflecting on the year that we had in 2024, and it comes on the heels of a very strong year in 2023 for equity market returns, 20% plus returns for 2 straight years. And for companies, there's a takeaway here for you. You've written that companies that measure their success through stock market returns may find that the market price has become a noisier judge of their actions. Explain what you mean by that, because a lot of companies have really leaned into the idea of AI. A lot of old legacy tech companies are talking up the AI possibilities. Everyone's trying to find an angle there. Some companies renamed themselves and incorporated AI into their mission.
I think that, when the market makes a good judgment on fundamentals and cash flows and growth and risk, the price is a good reflector of what your actions are delivering. But when you have a buzzword takeover, and this isn't the first one where we've seen this. We saw this with social media. We saw this with .com. I'm old enough to remember PCs coming onto the marketplace. Right? People use it often as a way of pushing up prices collectively. This is going to be good for the economy. And then you look back 10, 15, 20 years later, and you realize the net plus to the economy of each of these major changes has been far smaller. There have been winners and there have been losers, and the net effect has been far smaller. And I have a feeling a decade from now, when we look back at AI, there will be winners. We might not even know who the winners are till 2, 3, 5 years from now. But there will be losers, and the net effect, in my view, is going to be a lot smaller in terms of a plus than the market is building in.
So, Professor Damodaran, what does that mean for traders, for day traders who've been chasing the momentum, who kind of double down on the things that work and avoid the things that haven't worked, and have done very well because of that?
I'm glad you said traders, not investors, right? You know what traders care about? It's mood and momentum. They should be, to me, if you're a trader, don't distract yourself with long-term stories. Don't distract yourself with earnings and cash flow numbers. It's all about mood and momentum. And if you can detect shifts in mood and momentum, you should go for it. If you're an investor, then my only at least slow down question here will be, if somebody's talking about AI, a company claims that AI is going to help them, put them on the spot. Ask them what kinds of business they expect to get out of AI, how they plan to make money, rather than giving them a pass and adding a premium to their price just because they're in AI.
So as with momentum comes a lot of volatility and trading opportunities, and aren't the regulators sort of just right down the road at the end of the day? As you get more volatility, what do you think happens on the regulatory front?
To be honest, I don't see why regulators need to enter in and protect investors from their own greed. I mean, I know that sounds brutal, but I think it's not the regulator's job to step in and say, we're going to make the market less volatile. We're going to protect you from yourself. The nature of markets is chaos and volatility. It's a feature, not a bug. You want a market without chaos and without volatility? Well, you can try the Saudi Arabian market or the Singapore market. Very organized, but nobody's there. Markets attract people in because there's chaos, because there's uncertainty. So I don't view that as a plus or a minus. It's just there. It's the nature of people trading and liquidity. As prices are going to move a lot, some people are going to win, others are going to lose. People who lose are going to look to the SEC and say, you needed to protect me. And I don't think that should be the SEC's responsibility.
So it's another way of saying buyer beware for those who are chasing any kind of momentum, because it could turn on a dime at any given moment. Aswath Damodaran, thank you as always for your time. Really appreciate taking the time to speak with us. Professor of Finance at the Leonard Stern School of Business at NYU. We have a lot more coming up on The Close. Shares of Coca-Cola, well, they're bubbling higher by more than 4% after profit beat estimates. Shoppers paying higher prices for the company's products. Did you know they make milk?
Well, I did, but it's that weird milk.
It's a premium milk.
But it doesn't have, there's no lactate in it, right?
Right, there's no lactose in it, and
lactate.
It's high protein. Lactate is the lactose-free milk, but yeah, we'll talk about all of that.
I'm confused, so clearly everyone else should be confused also. This is The Close on Bloomberg. One stock on the move today is Coca-Cola. Oh, I see. Getting a pop from earnings. That was probably better. I should have read the prompter. After they beat analyst estimates, that's despite higher prices, consumers proved they were willing to spend on Coke's products, which include Sprite, Fairlife Milk, that thing that Scarlett was talking about, and Minute Maid Juice, among others. Joining us now to discuss is Bloomberg's Isabelle Lee. All right, give us some of the details into how they did.
So this is impressive because adjusted EPS was 55 cents, which is higher than expected. And the company has been raising prices for several quarters, but volume was up 2%. So it really just shows that consumers still like Coke, among other things. And this comes at a time when its rival Pepsi missed estimates. So Coke is really in America's DNA.
All right. It's in America's DNA, but also they have been expanding their drinks portfolio, right? It's not just sugary soda. Alex mentioned Fairlife Milk. That was a recent acquisition, or at least a recent shift into a new strategy, right?
It was a 2020 acquisition. The final performance payment will be paid out this year. And Fairlife is interesting. The reason how I know about Fairlife is because all the bloggers always blog it, because now it's all about protein. And the thing with Fairlife is it's high in protein, but lower in calories, but it's more expensive. But I guess people are willing to pay a premium if you get protein in a bottle.
Premium milk, Alex.
I mean, isn't that almond milk? That's what I use. I mean, I know it's not real milk, but
so
you know what I'm saying?
This is cow's milk.
But the whole point of like you pay premium for stuff, I mean, that kind of makes sense, which leads me to pricing power. So I'm assuming that, did they discuss pricing power on the call, I guess?
They did. So they said that the lower income segments in the US and in Europe are experiencing pressure, but then I don't think it's lower income buying Fairlife. I looked it up. Half a gallon is around $6, but a full gallon of normal milk, the gallons that you see in grocery stores, that's around $4. So it's almost double. But I was tricked into it and I bought it and I liked it. And I think younger folks like it, especially those who are fit. But then you see a lot of brands moving away as Americans become a little bit more health conscious. And this comes at a time when there's a rise in Wegovy, Ozempic. So that's probably the perfect pairing.
So when we heard from McDonald's, we heard that their lower income customers are definitely very price sensitive and are very, very weary of the cost of everything. To what extent did the CEO of Coca-Cola, James Quincy, also address inflation and their lower end customer?
So he addressed inflation, saying that for the lower income, it's a bit more tough right now. But then he also talked about tariff. And interesting, he said that they're actually more of a local company and they don't have a wide range of items that are imported. So I think that's kind of like what's offsetting potentially what inflation is. But also, what is inflation if consumers are willing to pay?
This is like a deeper question, right?
Feels existential.
Yeah, it does, doesn't it? It just depends on your brand and your pricing power. Isabelle, thanks a lot. Really appreciate it. Bloomberg's Isabelle Lee. Just to bring your attention to, President Trump is speaking with Elon Musk at the White House right now. We're going to bring you some of those headlines. Musk saying it's essential to reduce federal expenses. We'll continue to monitor those headlines for you as they cross. This is The Close on Bloomberg.
I wouldn't be leaning into the rest of the world trade. I do think we're still going to be in a U.S. leads the way for the year overall. But how much the U.S. can go up is going to depend on the uncertainty and where we started on the inflation.
That was Rebecca Patterson, senior fellow at the Council on Foreign Relations, former chief investment strategist at Bridgewater, talking about how the American exceptionalism trade is still intact with a big asterisk next to it.
Yeah, and it seems legit when we don't know where the economic outlook is going. John Williams, New York Fed president, was giving a speech saying just that. Economic policy remains highly uncertain, still expects GDP growth of about 2% for this year and for next, and that policy stands as modestly restricted. But if you don't know what's going to come down, you don't know how to manage monetary policy in that way. And that's why you're seeing the market kind of waffling. Like it's not, there's no real indication of anything going anywhere fast. You have the NASDAQ doing nothing, S&P doing nothing. I mean, literally Intel and Meta are doing pretty well, but Intel is really now potentially a U.S. policy story. If Global Foundries as well as Intel did really well, as you had the administration talking about producing chips and all the AI needs here in the U.S.
And Meta is now on its 17th day of gains. That is the longest streak ever, I believe.
It is. Record streak and record high all at the same time.
All right, some pretty incredible moves for a couple of these Mag 7 names. For more market analysis, let's welcome Richard Weiss. He is CIO of Multi-Asset Strategies with American Century Investments. Richard, I feel like talking about the Fed is kind of pointless right now because they're in spectator mode. They're not really doing anything. So the market is kind of left to do its thing. What is that thing right now?
Well, the market's looking at the fundamentals. Obviously, the policy agenda is taking center stage here, but the fundamentals are good. Look, let's face it, this administration comes in with tailwinds. The economy going strong, earnings double digits, so, flying like an eagle. Fly, Eagles, fly. Sorry, I had to jam that in there. But the economy is going strong, so there's a lot to be said for the U.S. equity market in particular. Now, to the extent that President Trump wants to lower taxes and make other policy moves, he obviously has to balance the budget, and so they're looking to cut government expenditures. This is a tightrope they're walking, and it's going to be very tricky. I don't think anybody would argue that the government has some excess and needs to lose some weight. But when you look to lose weight, you don't hack off your left leg. I mean, you'll lose weight, but you got lots of other problems. And so there's probably a safer way to do it, but this is the route they're taking right now.
And just to chime in here with some headlines from the White House, where Elon Musk is speaking with President Trump. Elon Musk saying it's essential to reduce federal expenses. He did say they're trying to be as transparent as possible on actions. All of our actions are fully public. And the president saying that he wouldn't let Elon Musk be involved if there were conflicts. Again, these are headlines coming from their conversation at the White House. We will bring you the full playback when it becomes available. Alex?
So what's the playbook then for U.S. exceptionalism still being all right? Rich?
Well, U.S. exceptionalism, look, what got us here was being a world leader in global trade, right? Protectionism and nationalism is distinctly not what got us these superior, exceptional returns in the stock market over the last 20 years, vis-a-vis bonds, vis-a-vis IFA, vis-a-vis emerging markets. And this is, once in 100-year types of outperformance we've experienced with the stock market. And again, I'd say it was because we were a global leader. To the extent we're going to, build walls physically or virtually via trade barriers, you have to question whether that's just a good negotiating ploy, because if those tariffs stay in place and it evokes more retaliatory tariffs and trade wars, that's not good for economic growth here or elsewhere, and it's inflationary. So I'm concerned about that. And also, I was trying to think about this the other day. What's the saying? No man is an island. Mm-hmm. But global trade relations, global politics is not unlike prison politics, is the best analogy I can come up with. So I've heard, okay? And that is, you can't go it alone. You kind of have to gang up. Even if you're the biggest guy in the yard, you have to gang up, because if you don't, the others will gang up against you. And so eventually we're going to have to work with these other nations. And I'm sure the president will come to that realization.
Okay, but it might take us a while to get there, because we're still in the early stages of them, kind of figuring out the different sides and who our alliances are with and who they're not with. So in the meantime, Rich, how do you position? How should investors be exposed to U.S. stocks versus rest of world versus other asset classes?
Well, I know some have been running to the precious metals, right? Gold and silver, because they're worried about inflation. And that's been a great place to be, along with Bitcoin, which I guess you can argue is a pseudo-inflation hedge. But we wouldn't necessarily recommend that. Your best defense when there is volatility is diversification. And you have a good argument to make here, a valuation argument, if nothing else, to move outside the U.S. into some of the developed and emerging equity markets, possibly commodities, hedge funds, private markets. But diversification is your only safe haven when there is uncertainty from the policy agenda.
That's what confuses me a lot about the VIX, because usually you're going to buy VIX for protection when you're nervous, right? But that doesn't necessarily seem correlated with realized versus implied. Do you use the VIX as a hedge?
Very well could do that. And there are a lot of vehicles to do so. The VIX is a beautiful hedge to stock market calamities. But to your point, the VIX is hovering around its historical norms, 15 or so, which is a relatively calm level for the fear index. And I think that's because, as we all know, the market hates uncertainty more than anything. But what's going on today is not uncertain. President Trump, campaigned on many of the things he's doing today. Project 2025, that Heritage Foundation report, lays out almost verbatim what the new administration is putting into place. So this shouldn't be a surprise to anybody. That's not to say there won't be volatility if and when certain things are enacted. But I would say the VIX is correctly staying calm, because none of this should be coming as a major surprise.
Hey, Rich, we really appreciate it. Thanks very much. Congrats on your Eagles winning. Richard Weiss, CIO of Multi-Asset Strategies with American Century Investments. I got to say, as we head into the close here, there is not that much happening on a broad index level individually. We're obviously seeing a lot of movers that tends to sort of go right around earnings. Meta, as you were mentioning, now up for a record run. But, you know, Rich isn't the only one talking about equities outside of the U.S. Citi was also saying that recent changes in flows and positioning are showing that the U.S. versus the rest of the world is changing just a bit, not reversing, but changing a little bit.
Yeah, they are saying that the net positioning for the S&P and the NASDAQ 100 is still moderately bullish, but gross positioning, especially when it comes to things like U.S. small caps, has really decreased, and Europe has been a beneficiary of all of that.
Yep, exactly. And of course, valuation. Looking at NASDAQ here off by 0.4%, the underperformer. Here is the closing bell. Full coverage for you.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
We're about 2 minutes away from the end of the trading day. I'm Alex Steele alongside Scarlett Fu. We're going to take you through the closing bell with a global simulcast. We're joined now by Carol Master and Tim Stenovic in the radio studio. We got TV, radio, and YouTube audiences worldwide. We're going to parse through these moments. Headline level, guys, nada.
Yeah, nada. So you know what I'm going to talk about? I'm going to talk about Meta because it's up 17 in a row. So we're talking about a gain of 18%. We talked about it yesterday. A stock that has had the most consecutive gains. What a run. Just up about 0.3%, but nonetheless, 17 in a row, up 18% in that time. So
it could have been one of your gainers, Carol.
I know.
I
was going to, but it was down.
It was teetering, yeah.
It was teetering.
Yeah, you don't want to risk it.
No.
Finley doesn't like that. Hey, you know, equity indices aren't doing much. Bitcoin down 2.2%, just trading around $95,000 per Bitcoin.
You know, I wonder if the CPI report is going to be more of a catalyst for something tomorrow. Volatility around the CPI report, according to some analysts, might be kind of limited because the Fed's not going to count on this one CPI report to make its next decision, right? I mean, it's going to be a couple of data points, a couple of CPI reports, a couple of jobs reports. So, you know, the stakes are not as high for this CPI report, but it'll be super interesting given that it might color Jay Powell's day 2 testimony.
Or at least they'll definitely get questions. He'll definitely get questions on that for sure. But I guess it's a direction of travel, right? We were talking earlier about inflation break-evens, particularly for 2-year, continue to rise. And we talked about Jay Powell not having entrenched inflation expectations, not seeing that in the market, but those expectations continue to move higher. All right, there's the closing bell, guys. Headline level, real uneventful. The S&P ending pretty much flat. The NASDAQ is the biggest loser of the day, but still just off by about 0.4%. And the Dow Jones Industrial Average off by about 0.3%. And just trying to take into account here what's happening with small and mid caps, also like a little bit softer, but guys, nothing to write home about.
Yeah, it's like ho-hum, right? S&P 500, kind of an even split. 261 names to the upside, Scarlett, 241 to the downside.
All right, let's take a look at the IMAP, which splits the S&P 500 into its 11 main sectors. And there is more green than there is red, and it's led by consumer staples, up about 0.9%. Energy stocks and material stocks also gaining at least 0.5%. The laggards of the day include consumer discretionary, which really is, we're talking about auto companies, automakers, which as a group are down about 5%. Healthcare stocks also marginally lower, and communication services just barely in the red.
All right, guys, 2 individual gainers. Intel, it's a top gainer in both the NASDAQ 100 and the S&P 500 on this Tuesday. This is coming after Vice President J.D. Vance over at the AI Summit in France said that the Trump administration will make sure that the most sophisticated artificial intelligence hardware is made right here in the United States. The two, you might remember, I'm talking also about global foundries, because if we bring that one up as well, Intel's up about 6% here at the close. Same, global foundries up about 6% as well. Those two companies are the largest U.S.-based operators of semi-foundries that make chips for outside customers. So, yeah, no surprise to see them gaining. And then Coca-Cola, it's up about 4.7% here at the close. The company coming out, fourth quarter organic sales growth and profit topping Wall Street expectations, and analysts calling the company's annual outlook pretty solid. So again, some outperformance by those names.
Okay, Scarlett mentioned that automakers were lower. Tesla helping to pull them down. 6.3% to the downside for Tesla. Down for a 5th day in a row, all because of BYD. Over in China, the company added advanced driver assistance features across most of its lineup for no extra cost. Its shares hit a record and Tesla moved lower. It's called the God's Eye Driver Assistance Program. Standard in vehicles priced from about $13,700. Can you believe that price point? It's also included it in several low-cost models, such as that Seagull hatchback. Tesla down about 32% from those December highs.
Let me just jump in because Gilead Sciences, or Gilead as it's now known, just reported results. Let's give you what happened in the fourth quarter. EPS of $1.90, beating the average analyst estimate of $1.71. Revenue of $7.57 billion, also higher than what was anticipated. In addition, Gilead raises its quarterly dividend to 79 cents a share. The profit forecast as well, topping analyst estimates. 2025 adjusted EPS anywhere from $7.70 to $8.10. Analysts were looking for $7.54. That stock higher by almost 3%.
All right, let's get to Avis. It's down about 5% here in the aftermarket. Fourth quarter results. America's revenue, we're looking at $2.12 billion. That's pretty much what the estimate was, $2.11 billion. International revenue, we're talking about $593 million. That's a little bit light. The estimate was for $602.4. We're looking also at overall revenue, $2.71 billion, smack on what the street was expecting. But we are again seeing this stock down in the aftermarket. It's kind of interesting. It's been up about 11% year to date, but we are seeing some disappointment here in the trade.
Yeah, also one headline, Avis Budget has named Brian Choi to succeed Joe Ferraro as its CEO. Shares right now down about 5.2%. Well, speaking of shares that are lower, Coty shares finished the day down by more than 9% today, hitting their lowest level going back to 2022. The company did lower its full-year profit projections and reported fiscal second quarter revenue that missed Wall Street expectations. And then check this one out. Fluence Energy shares really taking a dive today. The company reported that it slashed sales guidance and cited contract delays in Australia. Shout out to Carol Master for directing me to this one. Shares falling today by more than 46%.
What an ugly chart.
Yeah, that's you need a 2-day chart for that puppy. That's rough. Okay, taking a look at the bond market for a bit here, guys. The back end selling up just a touch, yields up by about 3 to 4 basis points. We had that 3-year auction, though, $58 billion. That came in pretty strong. Demand was really there. Then we get the 10-year and the 30-year later on in this week, too. So, again, looking for that supply digestion. But many tend to look at 4.5% on the 10-year as like that level that then do we sort of propel higher and get to 5%. That's sort of the line in the sand a little bit. So interesting to see how we trade tomorrow.
It's interesting. I want to go back to the trade. And, we were talking about the CPI report tomorrow, followed by then the following day, PPI. But we were talking with Mike McKee earlier out of Washington, who broke down the Jay Powell talk, and also Gina Martin Adams watching the markets. And they said, we are kind of watching this. There's so much coming out of investors that, little clues that we can get even from economic data points, certainly something like inflation, it's important.
Yeah, although John Authors has pointed this out. If you listen to companies' earnings calls, they aren't talking as much about inflation anymore. I mean, tariffs has kind of taken the place because that is a big question mark, and the impact on what it means for inflation is still very uncertain.
All right, we're getting some more earnings crossed right now. DoorDash crossing as well as Lyft. Lyft sees first quarter adjusted EBITDA about $90 to $95 million. Estimates were for $93.7 million. Fourth quarter gross bookings came in just shy of estimates at $4.28 billion. Lyft, though, buying back up to $500 million of shares. Shares of Lyft right now in the after hours higher by about 6.7%. Fourth quarter rides coming in just in line with estimates at 218.5 million. And fourth quarter adjusted net coming in above estimates at $114.5 million. All
right, going to DoorDash here, guys. For the fourth quarter, it looks to be a beat on revenue, a beat on orders. In terms of earnings, it might have come in a little bit light. Now, taking a look at their first quarter, the big headline is that gross order value. They now see at the high end of that $23 billion. The estimate was for under 23, so that also is a beat. Their adjusted EBITDA on the high end also beating. So pretty strong results from DoorDash, even though that stock is down 2%.
Yeah, I'm just watching Lyft, though, here in the aftermarket. It's bouncing around a lot. It's up 2.5%, then it's up just about 0.75%. But keep in mind that buyback, definitely a bit of an eye-popping number. But it is interesting that it's its first buyback program, buying up to $500 million worth of shares. So investors, though, bouncing around in terms of these results here.
I noticed that as well, and it suggests a consistent return of capital to shareholders that we're going to wait to hear in the conference call how they address that and to what extent that means that business is going well, that they feel confident enough to go buy back their own shares. You know, I look at the DoorDash results, and I'm sorry, I can't help but be colored by emotion.
I knew you were going to do this.
Yeah, well,
she doesn't like DoorDash.
I was talking about this at the meeting because my son orders way too much of it. And, you know, as a Gen Xer, this idea that you're going to pay X percent of the final bill on service costs and delivery fees, it's bananas.
I've talked to these young people, Scarlett, before, and they have to, like, delete the app from their phone because they're spending too much money.
Because they're so used to it. Well, they don't have any basis of comparison. The fact that you, like, a big chunk of your final bill is on delivery, just, oh.
It just, yeah. Well, I mean, you have to pay for it. They're talking, though, in their earnings release about some new initiatives that they're hoping to introduce to give valuable services for customers, merchants, as well as dashers, as they call it. And they said that they exited 2024 with some good momentum. So still trying to find out, you know, the reason why that stock is still getting hit. But nonetheless, interesting when it talks about its really strong order demand.
Yeah, interesting to see. And we are seeing some movement here. So we'll see how they kind of settle in the aftermarket and on those analyst calls. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We'll see you again, same time, same place tomorrow.
All right. We're also keeping an eye on Zillow, of course, because that company will be reporting as well after the market close. We're going to check in on what is going on in the housing market as well. We're going to break down all the results coming up on the close.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Alex Steele. Let's take a look at where markets closed out the day. It was a pretty steady as she goes. The S&P closed pretty much flat. The 10-year yield did move a little bit higher there, just by about 3 basis points. Again, the dollar index a little bit softer and gold a little bit softer as well. But compared to the moves that we were used to seeing in the past 3 weeks, this feels very muted and particularly calm.
And I'm sure Jay Powell liked it just the way it is,
totally.
Given that he was speaking, to the Senate Banking Committee. And of course, he will be speaking before the House Financial Services Committee tomorrow. Let's get you a couple of big movers on the day. I didn't include this on the chart, but Meta, by the way, up for a 17th straight day. That is a record run for shares of Meta. The big gainer here is DuPont. It was the best performer in the S&P 500, gaining almost 7%. The chemical and materials company reported a fourth quarter earnings beat. Meantime, you look at Marriott. The hotel company gave a full year outlook for net rooms growth that was below some analysts' estimates.
All right, another stock we're watching right now is Zillow, just reporting right now. The big news is that the company expects 2025 to be its first profitable year since 2012. In its newly released outlook, the company says it's going to generate positive net income on a GAAP basis this year. They posted a net loss of $112 million in 2024. It gives us a good excuse to talk about the housing market. Amy Nixon is housing and economic analyst at DFW, and she joins us now. Hey, Amy, we take a look at, say, Zillow looking at its first real profitable year in quite a long time, but their early indication shows that the housing market could remain muted. What's your take?
Yeah, it's been a rough housing market. The macro backdrop for this market has been really tough, but Zillow has been kind of like a gold star outlier amongst this because they're not necessarily beholden to the macro environment. And their reason for this is because they have multiple revenue streams. So where you see headwinds in home buying transaction, mortgage loan originations, that's all at like 30-year lows. But that's actually been a tailwind for the rental market. And Zillow has taken advantage of that. I know in their last earnings report, 1/5 of their revenue actually is now coming from their rental platform. And they just have a lot of growth potential ahead for that. So I wouldn't be surprised to see them be profitable in the near-term future. Surprisingly, or unsurprisingly to me, but if you look back into 2009 during that 2008 financial crisis, Zillow's first year of breaking profitability was in 2011. They have shown that they can perform well in bad macro environments and in bad housing markets.
Let me just jump in here because we do have some headlines from Redfin, which could be seen as a competitor to Zillow. Redfin expects to incur about $18 million to $21 million in total charges because it's going to be cutting 450 rentals jobs. Once again, Redfin saying it's going to be cutting 450 rentals jobs and it will incur anywhere from $18 million to $21 million in total charges. Amy, talk a little bit about the competition here for Zillow because the way that it's been described, it can almost be seen as like an everything real estate company, real estate services company?
In my opinion, Zillow's worst competitor is themselves. The only person who could beat them is themselves right now. And we saw that in 2021 with their bungled home iBuying business. That was a complete risk management disaster. In terms of these other companies, I would say, Redfin and Open Door, they're light competitors, but they do not have the infrastructure that Zillow has. And more importantly, they don't have the brand name recognition. Zillow, the term is searched more than the term real estate. And Zillow as a platform gets 230 million unique views a month. That is more than Netflix. That is more than the New York Times. There isn't another competitor out there that's positioned to sort of be what I would consider the Amazon of real estate, or that one, Zillow calls it the super app of real estate, where all your real estate needs can sort of be done on one app, one platform, start to finish.
Or like watching Netflix while on the Zillow app. Not that I've done that before. And to your point, Zillow says there's about 2.1 billion visits in the quarter on websites and apps, up 3% from a year earlier. Nevertheless, the housing market's being defined as sluggish. What makes it unsluggish?
Gosh, this has been talked about for years. This is a tough housing market. We need lower mortgage rates, obviously, but it's been proven difficult to get because the Fed cutting so far has not produced those results. So I think, honestly, the answer that's annoying that nobody likes to hear, but is the real answer, is time. We need more time. We need time for new inventory to hit the market. We need time for builders to finish new builds. And we need time, I think, for buyers to sort of accept that you're not going to get a 3% mortgage rate again. So maybe you don't like 7, but maybe we can get back to like a 5.5 or a 6. I think that would be enough to sort of bring traffic back. And a lot of analysts are expecting that in 25, we're going to see a marginal improvement in a transaction volume and in sales volume. And so I think, we might have seen the worst of the worst in terms of like the bottom of the recessionary transaction activity. Hopefully this will be a better year, but I think it's still going to be another tough year.
It's going to be another tough year, and I wonder, for people who are accustomed to the calendar of, there's a lot of property on available in the spring, and that's when you do your transactions so you can get your kids set up for the new school year. Is there a spring selling season anymore, Amy, or has that gone by the wayside because of how the housing market has really changed its complexion?
It's weaker now. Right now, I'm seeing more inventory come online. There's actually the highest inventory that we've had since pre-pandemic, since 2019. And that's obviously concentrated in certain regions more than others, particularly regions where we've been building. But the buying season is muted. In the last 2 years, what we've seen is the new buying season is when mortgage rates drop a little bit.
That's fair enough. Absolutely fair on that point. I wanted to you talked about the 5.5 is the new 6, et cetera. What about the actual rental market? That has nothing to do with actual mortgage rates, yet the rental market, Redfin, can be really difficult to manage. Actually, I'm going to pause my question, interrupt you there. Amy, we got to go to President Trump. Amy Nixon, housing and economic analyst at DFW. We want to bring you President Trump and Elon Musk. We're talking at the White House earlier, really digging into Doge. We want to bring you some of those headlines now.
Concerning Gaza and everything else. We had discussions also about Saturday at 12 o'clock. It's going to be a big moment. We'll see what happens. I don't expect much happening with these people, but we'll see what happens. And we're going to be signing a very important deal today. It's Doge, and I'm going to ask Elon to tell you a little bit about it and some of the things that we found, which are shocking. Billions and billions of dollars in waste, fraud, and abuse. And I think it's very important. And that's one of the reasons I got elected. I say we're going to do that. Nobody had any idea it was that bad, that sick, and that corrupt. And it seems hard to believe that judges want to try and stop us from looking for corruption, especially when we found hundreds of millions of dollars worth, much more than that, in just a short period of time. And we want to weed out the corruption. And it seems hard to believe that a judge could say, we don't want you to do that. Well, so maybe we have to look at the judges, because that's a very serious, I think it's a very serious violation. I'll ask Elon Musk to say a few words, and we'll take some questions. Elon, go ahead.
Sure. So at a high level, if you say what is the goal of Doge, and I think a significant part of the presidency is to restore democracy. This may seem like, well, aren't we in a democracy? Well, if you don't have a feedback loop, okay, we would have to, if you sorry. So, tell you, gravitas can be difficult sometimes. If there's not a good feedback loop from the people to the government, and if you have rule of the bureaucrat, or if the bureaucracy is in charge, and then what meaning does democracy actually have? If the people cannot vote and have their will be decided by their elected representatives in the form of the president and the Senate and the House, then we don't live in a democracy. We live in a bureaucracy. So it's incredibly important that we close that feedback loop, we fix that feedback loop, and that the public's elected representatives, the president, the House, and the Senate, decide what happens, as opposed to a large unelected bureaucracy. This is not to say that there are good people who are in the federal bureaucracy, but you can't have an autonomous federal bureaucracy. You have to have one that is responsive to the people. That's the whole point of a democracy. And if you looked at this, if you looked at the founders today and said, what do you think of the way things have turned out? Well, we have this unelected, fourth unconstitutional branch of government, which is the bureaucracy, which has, in a lot of ways, currently more power than any elected representative. And this is not something that people want, and it does not match the will of the people. So it's just something we've got to fix. And then we've also got to address the deficit. So we've got a $2 trillion deficit, and if we don't do something about this deficit, the country's going bankrupt. I mean, it's really astounding that the interest payments alone on the national debt exceed the Defense Department budget, which is shocking because we spend a lot of money on defense. But if that just keeps going, we're essentially going to bankrupt the country. So what I really want to say is, like, it's not optional for us to reduce the federal expenses. It's essential. It's essential for America to remain solvent as a country, and it's essential for America to have the resources necessary to provide things to its citizens and not simply be servicing vast amounts of debt.
And also, could you mention some of the things that your team has found, some of the crazy numbers, including the woman that walked away with about $30 million,
right,
et cetera?
Well, we do find it sort of rather odd that there are quite a few people in the bureaucracy who have ostensibly a salary of a few $100,000, but somehow manage to accrue tens of millions of dollars in net worth while they are in that position, which is, what happened at USAID. We're just curious as to where it came from. Maybe they're very good at investing, in which case we should take their investment advice, perhaps. But there seems to be mysteriously they get wealthy. We don't know why. Where does it come from? And I think the reality is that they're getting wealthy at the taxpayer expense. That's the honest truth of it. So, we're looking at, if you look at, say, Treasury, for example, basic controls that should be in place, that are in place in any company, such as making sure that any given payment has a payment categorization code, that there is a comment field that describes the payment, and that if a payment is on the do not pay list, that you don't actually pay it. None of those things are true currently. So the reason that departments can't pass audits is because the payments don't have a categorization code. It's like just a massive number of blank checks just flying out the building. So you can't reconcile blank checks. You've got comment fields that are also blank, so you don't know why the payment was made. And then we've got this truly absurd, a do not pay list, which can take up to a year for an organization to get on a do not pay list. And this, we're talking about terrorist organizations, we're talking about known fraudsters, known aspects of waste, known things that do not match any congressional appropriation, can take up to a year to get on the list, and even once on the list is not used. It's mind-blowing. So what we're talking about here, we're really just talking about adding common sense controls that should be present that haven't been present. So you say, like, well, how could such a thing arise? That seems crazy. When you understand that really everything is geared towards complaint minimization, so then you understand the motivations. So if people receive money, they don't complain, obviously. But if people don't receive money, they do complain. And the fraudsters complain the loudest and the fastest. So then when you understand that, then it makes sense. Oh, that's why everything they approve all the payments at Treasury. Because if you approve all the payments, you don't get complaints. But now we're saying that, no, actually, we are going to complain. If money is spent badly, if your taxpayer dollars are not spent in a sensible and frugal manner, then that's not okay. Your tax dollars need to be spent wisely on things that matter to the people. I mean, these things, it's just common sense. It's not draconian or radical, I think. It's really just saying, let's look at each of these expenditures and say, is this actually in the best interest of the people? And if it is, it's approved. If it's not, we should think about it. So, there's crazy things like just cursory examination of Social Security, and we've got people in there that are 150 years old. Now, do you know anyone who's 150? I don't. Okay. They should be on the Guinness Book of World Records. They're missing out. That's a case where, I think they're probably dead. It's my guess. Or they should be very famous, one of the two. And then there's a whole bunch of Social Security payments where there's no identifying information. Well, why is there no identifying information? Obviously, we want to make sure that people who deserve to receive Social Security do receive it, and that they receive it quickly and accurately. I'll tell you another crazy thing. So, one of the things is we are trying to sort of right-size the federal bureaucracy, just make sure that this. Obviously, there need to be a lot of people working for the federal government, but not as many as currently. So we're saying, if people can retire, with full benefits and everything, that would be good. They can retire, get their retirement payments and everything. And then we were told, this is actually, I think, a great anecdote, because we were told the most number of people that could retire possibly in a month is 10,000. We're like, well, why is that? Well, because all the retirement paperwork is manual on paper. It's manually calculated, then written down on a piece of paper. Then it goes down a mine. And I'm like, what do you mean a mine? Yeah, there's a limestone mine where we store all the retirement paperwork. And you look at a picture of this mine. We'll post some pictures afterwards. And this mine looks like something out of the 50s because it was started in 1955. So it looks like it's like a time warp. And then the speed, the limiting factor is the speed at which the mine shaft elevator can move determines how many people can retire from the federal government. And the elevator breaks down sometimes, and then nobody can retire. Doesn't that sound crazy? There's like 1,000 people that work on this. So I think if we can take those people and say, you know what, instead of working in a mine shaft and carrying manila envelopes to boxes in a mine shaft, you could do practically anything else, and you would add to the goods and services of the United States in a more useful way. So anyway, so I think that's an example. At a high level, if you say how do we increase prosperity, is we get people to shift from roles that are low to negative productivity to high productivity roles. And so you increase the total output of goods and services, which means that there's a higher standard of living available for everyone. That's the actual goal. Everyone's very quiet. Well, are people normally this quiet?
Your detractors, Mr. Musk.
I have to what?
Including a lot of Democrats.
I have detractors?
You do, sir.
I don't believe it.
Say that you're orchestrating a hostile takeover of government and doing it in a non-transparent way. What's your response to that criticism?
Well, first of all, you couldn't ask for a stronger mandate from the public. The public voted, we have a majority of the public voting for President Trump. We won the House, we won the Senate. The people voted for major government reform. There should be no doubt about that. That was on the campaign The president spoke about that at every rally. The people voted for major government reform, and that's what the people are going to get. They're going to get what they voted for. And a lot of times, people that don't get what they voted for, but in this presidency, they are going to get what they voted for. And that's what democracy is all about.
Mr. Musk, the White House says that you will identify and excuse yourself from any conflicts of interest that you may have. Does that mean that you are, in effect, policing yourself? What are the checks and balances that are in place to ensure that there is accountability and transparency?
Well, we actually are trying to be as transparent as possible. In fact, we post our actions to the Doge handle on X and to the Doge website. So all of our actions are maximally transparent. In fact, I don't think there's been, I don't know of a case where an organization has been more transparent than the Doge organization. So, the kind of things we're doing are, I think, very, very simple and basic. They're not, what I mentioned, for example, about Treasury, just making sure that payments that go out, taxpayer money that goes out, is categorized correctly, that the payment is explained, that organizations on the do not pay list, which takes a lot to get there, that actually are not paid, which currently they are paid. These are not individual judgment decisions. These are about simply having sensible checks and balances in the system itself to ensure that taxpayer money is spent well. So it's got nothing to do with, like, say, a contract with some company of mine at all.
But if there is a conflict of interest when it comes to you yourself, for instance, you've received billions of dollars in federal contracts when it comes to the Pentagon, for instance, which the president, I know, has directed you to look into.
Yeah.
Are you policing yourself in that? Is there any sort of accountability check and balance in place that would provide any transparency for the American people?
Well, all of our actions are fully public. So if you see anything, you say, like, wait a second, hey, Elon, that seems like maybe that's, there's a conflict there. It's not like people are going to be shy about saying that. They'll say it immediately.
Including you yourself.
Yes. But transparency is what builds trust, not simply somebody asserting trust. So not somebody saying they're trustworthy, but transparency, so you can see everything that's going on. And then you can see, am I doing something that benefits one of my companies or not? It's totally obvious.
And if we thought that, we would not let him do that segment or look in that area if we thought there was a lack of transparency or a conflict of interest. And we watch that also. He's a big businessman. He's a successful guy. That's why we want him doing this. We don't want an unsuccessful guy doing this. Now, one thing also that Elon hasn't really mentioned are the groups of people that are getting some of these payments. They're ridiculous. And we're talking about billions of dollars that we've already found. We found fraud and abuse. I would say those two words as opposed to the third word that I usually use, but in this case, fraud and abuse. It's abusive because most of these things are virtually made up, or certainly money shouldn't be sent to them. And you know what I'm talking about. It's crazy. So, but we're talking about tens of billions of dollars that we've already found. And now a judge who's an activist judge wants to try and stop us from doing this. Why? Why would they want to do that? I campaigned on this. I campaigned on the fact that I said government is corrupt. And it is very corrupt. It's very, very, it's also foolish. As an example, a man has a contract for 3 months and the contract ends, but they keep paying him for the next 20 years, because nobody ends a contract. You get a lot of that. You have a contract that's a 3-month contract. Now, normally, if you're in a small, in all fairness, it's the size of this thing is so big.
Yeah.
But if you have a contract and you're in a regular business, you end the contract in 3 months. It's a consultant. Here's a contract for 3 months, but it goes on for 20 years. And the guy doesn't say that he got money for 20 years, They don't say it. They just keep getting checks month after month. And you have various things like that, and even much worse than that, actually, much worse. And I guess you call that incompetence, maybe.
Yeah.
It could be corruption. It could be deals made on both sides, where the guy gets the money, he kicks. I think there's a lot of kickback here. I see a lot of kickback here.
There's a lot of kickbacks.
A tremendous kickback, because nobody could be so stupid to give out some of these contracts. So he has to get a kickback. So that's what I got elected for, that and borders and military and a lot of things, but this is a big part of it. And I hope that the court system is going to allow us to do what we have to do. We got elected to among other things, find all of this fraud, abuse, all of this horrible stuff going on. And we've already found billions of dollars, not like a little bit, billions, many billions of dollars. And when you get down to it, it's going to be probably close to $1 trillion. It could be close to $1 trillion that we're going to find. That will have quite an impact on the budget. And you'll go to a judge where they handpick a judge, and he has certain leanings. I'm not knocking anybody for that, but he has certain leanings. And he wants us to stop looking. How do you stop looking? I mean, we've already found it. We have a case in New York where a hotel has paid $59 million, $59 million because it's housing migrants, illegal migrants, all illegal, I believe.
And they were being paid twice the normal room rate at 100% occupancy.
Unbelievable.
So it's a racket.
Mr. Musk, can I ask a question?
Well, if I may sort of just going for the president's comments, at a high level, you say, well, what are the two ingredients that are really necessary in order to cut the budget deficit in half from $2 trillion to $1 trillion? And it's really two things: competence and caring. And if you add competence and caring, you'll cut the budget deficit in half. And I fully expect to be scrutinized and get a daily proctology exam, basically. Might as well just camp out there. So it's not like I think I can get away with something. I'll be scrutinized nonstop. But with the support of the president, we can cut the budget deficit in half from $2 trillion to $1, and then with deregulation, because there's a lot of sort of regulations that don't ultimately serve the public good. We need to free the builders of America to build. And if we do that, that means I think we can get the economic growth to be maybe 3-4%, maybe 5%. And that means if you can get $1 trillion of economic growth and you can cut the budget deficit by $1 trillion, between now and next year, there is no inflation. There's no inflation in 26. And if the government is not borrowing as much, it means that interest costs decline. So the mortgage, their car payment, their credit card bills, anything, their student debt, the monthly payments drop. That's a fantastic scenario for the average American. I mean, imagine they're going down the grocery aisle and the prices from one year to the next are the same, and their mortgage, all their debt payments dropped. How great is that for the average American?
We had no idea we were going to find this much. And it's open. It's not like complicated. It's
not
simple
that complicated.
Stuff.
It's just like, a lot of work. Yeah.
We can't believe it. A lot of work, a lot of smart people involved. Very, very smart people. But you're talking about anywhere, maybe $500 billion. It's crazy the kind of numbers you're talking about. It's really crazy. Normally when you're looking at something, you'll find you're looking for 1 out of 100. Here, you're almost reversing it. You look for one that's good.
Yeah.
And you can look at the title and you say, why are we doing this? Why are we doing that? And the public gets it. The public gets it. You've seen the polls. The public is saying, why are we paying all this money? This for years, this has gone on.
Mr. Musk,
President Trump.
Yeah, go ahead. Wait, go ahead.
Senator Rand Paul today said that DOGE cuts will ultimately need a vote in Congress. Do you agree with that? Is that the plan?
I really don't know. I know this. We're finding tremendous fraud and tremendous abuse. If I need a vote of Congress to find fraud and abuse, it's fine with me. I think we'll get the vote, although there'll be some people that wouldn't vote. And how could a judge want to hold us back from finding all of this fraud and finding all of this incompetence? Why would that happen? Why would even Congress want to do that? Now, Congress, if we do need a vote, I think we'd get a very easy vote because we have a track record now. We've already found billions of dollars of abuse, incompetence, and corruption. A lot of corruption.
If a judge does block one of your policies, part of your agenda, will you abide by that ruling? Will you comply with that
Well, I always abide by the courts, and then I'll have to appeal it. But then what he's done is he slowed down the momentum. And it gives crooked people more time to cover up the books. If a person's crooked and they get caught, other people see that, and all of a sudden it becomes harder later on. So, yeah the answer is I always abide by the courts, always abide by them, and will appeal. But appeals take a long time, and I would hope that a judge, if you go into a judge and you show him, here's a corrupt situation, we have a check to be sent, but we found it to be corrupt. Do you want us to send this corrupt check to a person, or do you want us not to give it and give it back to the taxpayer? I would hope a judge would say, don't send it, give it back to the taxpayer.
Yeah, if I can add to that, what we're finding is that a bunch of the fraud is not even going to Americans. So I think we can all agree that if there's going to be fraud, it should at least go to Americans. But a bunch of the fraud rings that are operating in the United States and taking advantage of the federal government, especially in the entitlements programs, are actually foreign fraud rings. They're operating in other countries and actually exporting money to other countries. We should stop that.
Mr. Musk,
and this is big numbers. Talk about $100 to $200 billion a year.
Sure.
Serious money.
Mr. Musk, you said on X that an example of the fraud that you have cited was $50 million of condoms was sent to Gaza. But after fact-check this, apparently Gaza in Mozambique, and the program was to protect them against HIV. So can you correct the statements? It wasn't sent to Hamas, actually. It was sent to Mozambique, which makes sense why condoms was sent there.
Yeah.
And how can we make sure that all the statements that you said were correct, so we can trust what you say?
Well, first of all, some of the things that I say will be incorrect and should be corrected. So nobody's going to bat 1,000. I mean, we will make mistakes, but we'll act quickly to correct any mistakes. I'm not sure we should be sending $50 million worth of condoms to anywhere, frankly. I'm not sure that's something Americans would be really excited about. And that is really an enormous number of condoms, if you think about it. But if it went to Mozambique instead of Gaza, I'm like, okay, that's not as bad, but still, why are we doing that?
Mr. Musk, can you talk a little bit about how closely you're working with agency heads as you're directing these cuts? Do they have how much input do agency heads have when you're making these decisions?
Yeah, we work closely with the agency heads, there are sort of checks in place. So it's not just us just going in and doing things willy-nilly. It's in partnership with the agency heads, and I check frequently with the president to make sure that this is what the president wants to have happen. So we talk almost every day, and I double check things to make sure, is this something, Mr. President, you want us to do this? Then we'll do it.
USAID has been one of your main targets. Are you concerned at all that some of the cuts or that shutting that agency altogether may lead to diseases or other bigger problems starting in other countries that then come to the United States? Yeah, so that's an interesting example. So that's something where we work closely with the State Department and Secretary Rubio. And we have, for example, turned on funding for Ebola prevention and for HIV prevention. You left that, you said?
Yes, correct. And we are moving fast, so we will make mistakes, but we'll also fix the mistakes very quickly. So,
do you see it as a worthy cause, USAID?
I think that there are some worthy things, but overall, if you say what was the bang for the buck, I would say it was not very good. And there was far too much of what USAID was doing was influencing elections in ways that I think were dubious and do not stand the light of day.
I can just ask a follow-up to the Pentagon contracts. If you have received billions of dollars in contracts from the Pentagon, and the president's directing you to look into the Department of Defense, is that a conflict of interest?
And are going to do at the president's request.
Does that present a conflict of interest for you?
No, because you'd have to look at the individual contract and say, first of all, I'm not the one, filing the contract. It's people at SpaceX or someone who will be putting for the contract. And I'd like to say, if you see any contract where where it was awarded to SpaceX and it wasn't by far the best value for money for the taxpayer, let me know, because every one of them was.
The president said the other day that you might look at treasuries. Could you explain that a little bit? What kind of fraud, and that question goes to both of you, what kind of fraud are you expecting to see or do you see right now in U.S. treasuries?
Yeah, I think you mean the Treasury Department as opposed to Treasury bills. Or
you also referenced treasuries on Air Force One the other night.
Go ahead. Well, as I mentioned earlier, really the first order of business is to make sure we're actually collecting. Sorry for this. I thought my son might enjoy this, but he's sticking his fingers in my ears and stuff. It's a bit hard to hear sometimes. Hey, stop that. No, the stuff we're doing with the Treasury Department is so basic that you can't believe it doesn't exist already. So, for example, like I mentioned, just making sure that when a payment goes out, it has to have a payment categorization code. It's like, what type of payment is this? You can't just leave the field blank. Currently, many payments, the field is left blank. And you have to describe what's the payment for, some basic rationalization. That also is left blank. So this is why, the Pentagon, when's the last time the Pentagon passed an audit? I mean, a decade ago, maybe? Ever? Really? And we want to just, in order to actually pass audits, you have to have financial information that allows you to trace the payments. And once in a while, the Treasury has to pause payments if it thinks the payment is going to a fraudulent organization. If a company or an organization is on a do not pay list, we should not pay it. I'm sure you would agree. Like, if it's quite hard to get on that payment, the do not pay list, it means that this is someone that is like dead people, terrorists, known fraudsters, that kind of thing. We should not pay them. But currently we do, which is crazy. We should stop that.
Many transactions. And by the way, hundreds, thousands of transactions like that. You know, we have a big team. And for the sake of the country, I hope that the person that's in charge and the other people that report to me that are in charge are allowed to do the right thing, namely make sure everything's honest, legitimate, and competent. But we're looking at just, when you look at USAID, that's one. We're going to look at the military. We're going to look at education. They're much bigger areas. But the USAID is really corrupt. I'll tell you, it's corrupt. It's incompetent, and it's really corrupt. And I can't imagine a judge saying, well, it may be corrupt, but you don't have the right. You got elected to look over the country and to, as we say, make America great again, but you don't have the right to go and look and see whether or not things are right that they're paying or that things are honest that they're paying. And nobody can even believe this. Other people, law professors, they've been saying, how can you take that person's right away? You're supposed to be running the country, but we're not allowed to look at who they're paying it to and what they're paying. We have massive amounts of fraud that we caught. I think we probably caught way over a lot of billions of dollars already in, 2 weeks?
Yes.
And it's going to go to numbers that you're not going to believe. And much, as I said, much is incompetence and much is dishonesty. We have to catch it. And the only way we're going to catch it is to look for it. And if a judge is going to say you're not allowed to look for it, that's pretty sad for our country. I don't understand how it could even work.
On the buyout program, can you personally guarantee that?
Which one?
The buyout program, the operative federal workers. Can you personally guarantee that the workers who opt in to resign now will be paid through September?
They'll get their money, but they're getting a good deal. They're getting a big buyout. And what we're trying to do is reduce government. We have too many people. We have office space. It's occupied by 4%. Nobody's showing up to work because they were told not to. And then Biden gave them a 5-year pass, some of them, 48,000 of them, gave them a 5-year pass, that for 5 years you don't have to show up to work. And let me tell you, this is largely, much of this stuff is because of Biden. It's his fault. He allowed this country, what he did on our border. What he did on our border is almost not as bad as what he did with all of these contracts that have come out. It's a very sad day when we look at it. I can't even believe it. But many contracts just extend, and they just keep extending, and there was nobody there to correct it. And that cannot be, I can't imagine that could be held up by the court. Any court that would say that the president or his representatives, like Secretary of the Treasury, Secretary of State, whatever, doesn't have the right to go over their books and make sure everything's honest. I mean, how can you have a country? You can't have anything that way. You can't have a business that way. You can't have a country that way. Hey, thank you very much, everybody. Thank you.
All right, guys. Thank you, press. Head down.
That was President Trump alongside Elon Musk in Washington, D.C. in the Oval Office. This was after President Trump signed an executive order ordering federal agencies to lay the groundwork for widespread firings of government workers in the coming months. This executive order compels the agencies to work with Elon Musk's DOGE, the Department of Government Efficiency, to identify large-scale reductions in the federal workforce and determine which agency components may be eliminated outright. There are a couple of headlines from the playback. We heard Elon Musk say that it is essential to reduce federal expenses. He said, we're moving fast, we'll make mistakes, but we will correct the mistakes along the way, and that they're trying to be as transparent as possible on all actions, and that all of our actions are fully public. President Trump says that he would not let Elon Musk be involved if there were conflicts in response to questions about potential conflicts of interest here. And he said that if necessary, he would seek Congress's vote on DOGE's cuts if it comes to that. He would look at spending related to the military as well as education, and that federal workers who are taking those buyouts will get their money. So again, some of the headlines from that news conference, impromptu news conference that President Trump just held with Elon Musk. I want to bring in now Henrietta Treyz, Managing Partner and Director of Economic Policy at Veda Partners. And Henrietta, I know we booked you to talk about something entirely different, but I do want to just bridge the link between what just happened in the White House and what we were intending to talk about. Just remind us of the math here, because when we look at what the Department of Government Efficiency is tasked with doing, looking to offering buyouts to federal employees, maybe get rid of certain government agencies completely, will these efforts move the needle at all in reducing or mitigating our deficit as well as our debt burden?
Right. That's exactly the question. And I think while this press conference went out to the world, it had a very targeted audience, and that is the House Budget Committee. And the members of that committee, there are three of whom are really aggressive deficit hawks and are having a very difficult time getting to yes on the House budget resolution for one big, beautiful bill that would cover all of the $4.6 trillion cost of extending the 2017 tax cuts, not to mention the Social Security benefits promise that the president made to voters to not tax those, as well as no taxes on tips. So the math is really what's most important to take away from that press conference. And you'll note that the president very purposefully and actively did not use specific numbers. They're talking about generalities of maybe getting to $1 trillion, but he sort of stopped himself when he tried to list specific items that they were cutting and specific dollar figures that they've found, instead saying billions and billions, which is all fine and well and great and laudable to find that kind of fraud and waste that he specifically stated. But we need over $5 trillion to cover the cost of this bill, and they do not have that money. So the purpose of this press conference is to make it look like they do.
Right. And part of it, I guess, is to also bring in revenue from the tariffs that have been announced, the tariffs that the president says will be imposed at some point as well. For instance, there's talk about tariffs on Europe. None of these have actually been put in place. Not all of them, I should say, have been put in place. How much money can be raised through tariffs, assuming that they go out as intended?
Exactly. So we also, there's so many legs to this stool, but DOGE savings is one piece for $1 trillion. The tariff revenue has to be $1 trillion. That's what the president has promised House members in the White House when they were in meetings late last week. And that's why he quickly came out and then actually announced the tariffs, including the 25% tariffs on steel and 25% tariffs on aluminum against all of our global allies and foes alike. That is to demonstrate similarly to the House Budget Committee, hey, we are bringing in this revenue. DOGE is finding money. The tariffs are going on. We're getting the money needed to cover what will surely be massive deficit increases from this tax bill later on in the year, not to mention the $340 billion that they'd like to spend to boost immigration spend and military investment. So they need money from all the places, which is why we say take tariffs literally and seriously. He needs the money, whether you think tariffs are a good policy or not. This is how the president has identified getting that revenue.
And Wall Street likes what they've heard so far from the president when it comes to reducing government waste. Ken Griffin, of course, of Citadel, praising these efforts. But at the same time, he's saying that the threatened tariffs dull the U.S.'s competitive edge. We have heard, however, the president talking about perhaps once again ending this carried interest tax perk. Is this something that has more of a chance of going through this time around since he's not up for re-election?
No, man. I mean, I've been covering carried interest for like 20 years now. First of all, it's $14 billion in revenue. So this is tiny. And it does have very strong constituencies, most notably in the tri-state area, New York, but real estate as well. So what this has historically done is it's created an opportunity for one member who is usually at risk of losing their reelection to come out and kill the proposal to tax carried interest. President Trump went after this potential basket of revenue in 2017. The Republican Party and the Democratic Party warred about this. It's one of those weird instances where you get a lot of press around it. It gets a lot of attention from the financial markets, but it's a drop in the bucket and usually, obviously, never been actually closed.
Henrietta, really appreciate your joining us. Henrietta Treyz of Veda Partners, thank you so much. Now, earlier today in Washington, Fed Chair Jay Powell told Congress that the Fed is in no rush to lower rates. Take a listen to what he said.
With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation.
Nancy Lazar, Piper Sandler chief global economist, is here with us now. And Nancy, Jay Powell will be testifying again tomorrow. What kind of backdrop will he have when he testifies? Because the CPI report for the month of January comes out 8:30 a.m.
Yeah, it probably will increase about 0.3%. Headline, core also the same. So we had 1 month of a good number, but the bottom line is inflation is sticky. And I was actually pleased to hear Powell that he is going to be restrained in cutting rates again anytime soon. I would argue he doesn't need to cut rates. Economy's fine.
What about within the CPI report? We're always paying a lot of attention to shelter, and that's been stickier than what a lot of people had anticipated. How big of an overhang will that be?
Shelter will probably continue to melt down. The market indicators definitely point in that direction. But I think that's a little bit of a miscue. If you are still net in an inflationary environment, if one price comes down, another price goes up, which is actually what you're seeing. Used car prices are now going back up. Obviously, we know what's going on with food prices. So net, we're still in an inflationary environment. And to connect the dots, the federal outlay surge we've seen over the past 5 years, Wall Street has never seen that in our careers. It's been 50 years, 60 years actually, since you've seen a surge in federal outlays like we've seen over the past few years. That's a main reason for the inflation, and then the Fed monetized it. So I was actually very pleased to hear the Fed today suggest they're in no hurry to cut rates. I would say, why are you going to cut rates? The unemployment rate's 4%.
Okay, and of course we got PPI the following day and retail sales as well. How's the market set up for these reports that show, for the most part, the economy and the consumer is doing well?
That's right. And again, why do we need lower interest rates given what we have as a healthy consumer? Consumer spending in the fourth quarter was 4%. We'll see what it does tomorrow. 1 month doesn't make a trend. The underlying trend for the consumer is very, very solid. PPI is going to go up with not just the tariffs, but with other areas where prices are going up. And companies are raising prices in part because their input costs are going up. We've seen that this earnings season, from Disney to Pepsi to Coca-Cola. They're raising prices. They don't want to cut prices. And so net, we still have this sticky inflation. Blame the massive surge we've seen in federal outlays and the Fed monetizing that. Right. And so again, I'm pleased the Fed is going to be on hold.
All right, Nancy, really appreciate your joining us. Thank you so much. Nancy Lazar is Piper Sandler chief global economist. That does it for us on The Close. Balance of Power is up next. Have a great evening, everyone. This is Bloomberg.